Hello everyone, thank you for tuning in. Those of us in the United States are very concerned about the stability of the banking system. We know things aren't going well. In fact, the level of suspicion towards it is at an all-time high as depositors are starting to see that the too big to fail narrative may be nothing short of a myth, especially when you really begin to understand that the FDIC insurance is not really going to help you get your money in the worst case scenario. At this time, the existence of many U.S. banks with high exposure to commercial real estate depends on commercial property valuations, and as you know, I've covered this at great length before here on my channel. Commercial property valuations have been declining 20 to even 40% in some markets, as well as on the outcome of the looming commercial mortgage maturities, meaning, will those loans be refinanced? Will borrowers default by the time the loan matures? Those are the questions that lenders are asking right now. Well, I do have quite unfortunate news for you. We are starting to see commercial property foreclosures rise. Since 2020, foreclosures have more than doubled. I'll repeat that again. Since 2020, foreclosures on commercial properties have more than doubled, rising at the fastest pace since the 2008 financial crisis. $1.7 trillion worth of commercial real estate debt is projected to mature from 2024 to 2026. Roughly 30% of outstanding commercial real estate debt will need to be refinanced at much higher rates. You know, that quarter-point rate cut, because, elections, is not going to help us here. Remember, everything is always in plain sight. Fed Chair Jerome Powell did state in an interview several months ago, quote, "I expect there to be bank failures." He said those exact words. Seeing the latest data, he probably wasn't joking. Commercial property foreclosures hit $20.6 billion with a B dollars in the second quarter of this year, the highest reading since the third quarter of 2015. Here on your left-hand side is the volume of commercial property foreclosures shortly leading up to the 2008 financial crisis, then during it, and then a slow decline in foreclosures through 2015. Well, now on your right-hand side, you will see that the upward trend is clearly concerning, and as of right now, it has reached 2015 levels, the highest in nearly a decade. Here's a bit of a better illustration, in my opinion. This is month over month. And of course, this is very bad news, not just for the commercial real estate market, but for those lenders that hold massive portfolios of these mortgage loans. This report is updated on a monthly basis, and it shows that commercial foreclosures rose from a low of 141 foreclosures in May of 2020 to 647 in June of 2024. Representing a 219% year-over-year increase. This marks a consistent upward trend that began in June of 2020, following an almost 7-year phase of continuous declines. Commercial properties are dropping in value across the United States. Prior to the pandemic, office occupancy rates were well over 90% in the United States. 4 years later, the latest data shows that they are hovering around 50% today. As is seen here, roughly 1 out of every 5 offices in the United States is currently vacant. This is the case across the country, as I said, but just to give you an idea, here's a recent article by the Dallas Morning News reporting that Texas commercial property foreclosures filings are surging. Texas ranks 3rd nationwide for number of commercial properties facing foreclosure. The commercial real estate crisis is spreading. U.S. office vacancy rates in San Francisco reached 25.4% in June, the most among major American metros. This is followed by Houston and Seattle, where office vacancy rates are 23.8% and 23.2% respectively. Meanwhile, the national office vacancy rate hit a record nearly 20% in the first quarter of this year, above 2008 and above 2020 levels. Vacancy rates are expected to rise to as high as 24% by 2026, according to Moody's. The commercial real estate crisis is a major problem that's unlikely to go away. The Wall Street Journal published an article that is some type of Orwellian doublespeak, in my opinion. Let me know what you think in the comments, but here's what it says. Surge in commercial property foreclosures suggests bottom is near. Did they really try to masquerade a scary word such as a crash or a collapse as a bottom? Well, of course we know that a crash is looming. Here we have a revelation. They say banks and commercial lenders are seizing control of distressed commercial properties at the highest rate in nearly a decade, a sign that the sector's punishing downturn is entering its next phase and approaching a bottom. In other words, there is a massive crash coming. They know it, everybody knows it, and it is just around the corner. And it doesn't matter what the Federal Reserve decides to do now with respect to cutting rates or holding the rate where it is. None of that will make a difference because it takes months, if not years, to unwind the true outcomes of their failed policies. There's no other way to put this. There's no denying the fact that the Federal Reserve has fueled these massive asset bubbles with keeping those rates low for years and keeping that money printer on even longer. The question is, why now? Well, in my recent video where I explained the risks associated with the banking sector, I mentioned that as someone who has audited large publicly traded United States banks before, I can tell you that the rise in bank reserves as of the second quarter of this year tells me that banks are starting to play it safer now, and they anticipate having to take losses as consumer delinquencies have been on the rise for several months now. And in addition to those, now we see commercial property loans go deeper and deeper into delinquency, and subsequently properties are foreclosed on. The decision to foreclose on a property is the result of months of discussions and communication with borrowers who may have been waiting on their cash flows to pick up, on new tenants to move in maybe, but none of those things are happening. And so they lose hope and they communicate those things to their lender. And according to the United States financial reporting standards, lenders need to reflect the outcomes of those conversations on their financial statements. So they will reserve for bad loans, which they have done. They have been doing quarter over quarter now. And at quarter end, they will take a loss and then foreclose on that property. In order not to take a big hit at year end, companies take smaller losses at quarter end to smooth out their earnings. And so this is precisely what we've been seeing for several quarters now with regional and mid-sized banks. At the same time, there's over $6 trillion in commercial real estate debt in the United States. Approximately 50% of it is held by banks, and small banks hold 70% of these loans. So it is fair to say that small to mid-sized banks are in deep trouble. This is definitely something to really keep an eye on and possibly make sure that you are in control of your finances and you're well prepared for anything that the data that I just shared with you may result in. Thank you for watching. I appreciate your time. Please show your support. It truly does go a long way. It tells me that this information is helpful and interesting. Give this video a thumbs up, consider sharing it, and make sure that you subscribe both on Rumble and on YouTube. I would love to have you back for my next one tomorrow. Have a great rest of your day. Take care.